Hey, what's going on, everybody? Chris French with TexasWest Capital. I got Andrew. I got Tillman sitting in the wings, guys. As always, remember to hit the like, hit the thumbs up, hit the subscribe, follow, share the link, all that great stuff. We've got a lot of good stuff to talk about today. We're going to discuss BBVA's, the big Spanish bank, advising their affluent customers to add 3 to 7% Bitcoin in their portfolios. We're going to talk about how the biggest Bitcoin mining companies or makers, the ones that make the machines, are setting up shop in the U.S. ahead of tariffs. And also we'll talk about JPM. Andrew wants to talk about them because he loves JPM. I think he loves them more than he loves the Fink, man. All right, I think that's what's up. So anyway, like I said, y'all, hit that thumbs up, hit the subscribe, follow us, check it on in. Let's bring the guys in here. What's going on, Andrew? What's going on, Tillman?
Hey.
Listen, nothing can fight the Fink. All right, you can't fight the Fink. Jamie Dimon works for Larry Fink in my world. So yeah, can't beat it. Absolutely can't beat the Fink.
Well, I love that you guys brought the excitement that I started the show with. I mean, we went here and then you guys came on and went right down here. Yeah, I apologize to the audience for these guys' lack of just jumping in here and being excited for you today.
Listen, it's that countdown. That countdown almost puts me to sleep before the show. I mean, it was 9 minutes long.
I don't know, 30 seconds on my planet, 9 months on your planet.
Well, are you in the crypto sphere or not? And 30 seconds is 9 minutes in the crypto space. I mean, there's already been 5 more treasury companies that have been propped up while that counter was counting down to get on the show.
Are they loading up on QNT?
They are loading up on QNT.
Inside joke, guys. Inside, these guys were talking about how Arch Public was going to become a QNT holder. They were going to add to their treasury there.
QNT
Beards and Bitcoin, not
QNT Maximalist here on Beards and Bitcoin.
We're going to be the first QNT publicly traded treasury company. So
first and only, and last. Oh man! So listen, BBVA, big thing, big Spanish bank. They've been kind of facilitating crypto stuff and whatever since 2021 for their clients. But they've actually come out and said, "Hey, listen, guys," to their affluent customers. They said, "Hey, listen, you should have 3 to 7% of your portfolio allocated to Bitcoin." Guys, it was last year. I mean, this is our 50th show here. Just over a year we've been doing this. Mm-hmm. And I know that sounds weird because there's 52 weeks in a year, but we missed a couple of weeks there. But yeah, at that time we were talking about, Fink talking, hey, 1%, right?
Yeah.
I mean, this was just.
I don't even think he had come out and said that yet. I mean, the truth of the matter is that a year ago, IBIT had existed for about 4 months. They had taken in during that time frame about 15 to 20 billion in assets. They're closing in on 80 billion assets now. The overall just ETF sector associated with Bitcoin, spot Bitcoin ETFs, closing in on 150 billion in total assets. Just extraordinary stuff. What concerns me about, for example, a BBVA announcement like that, and we're getting more of those treasury companies. It's a push and pull, at least in my mind right now, associated with where do we go with price, because all of these announcements feel a little toppy, if I'm being completely honest. But at the same time, you also have the reality of action associated with the foundational, sort of principles of where we're at in terms of flows, right? Yeah. Bitcoin ETF flows aren't slowing down, even in the midst of sell in May and go away. You've got treasury companies that are outstripping the demand associated with Bitcoin ETFs right now. You have the likes of Larry Fink and others talking about 3 to 5 to 7% allocation to Bitcoin and only Bitcoin. You have IPOs that are happening in the crypto space. Circle is up 300, and I think yesterday, in totality, 380% since it went public. That's extraordinary, right? So that's going to be more IPOs. So you mentioned in your your intro that mining companies are coming back to the United States. Anybody want to take a wild guess why that's happening? Because 1, 2, or 3 of those are going to end up becoming additional public companies. I'm certain of it, right? So the liquidity associated with the crypto space, flows that continue, that's all going to continue. That's not going to necessarily slow down. It's just that the rhetoric, again, having been in market cycles now for the better part of 30 years, feels to starting to it's a little bit bubbly.
Feel a little frothy.
Yeah, it's a little frothy.
Yeah.
But you ride the wave, right?
Exactly.
You ride the wave. The best investors in the world hold on to their winners way, way, way longer than most of us do. So, maybe.
And the big thing, of course, we want to point out, the fact that we've been in these things. It's just that, real quick, let me just say that, people tend to get jumpy when the froth starts to show up, but then price can often continue up higher,
of course,
and continue to get frothier and frothier before you actually get the thing. So I think what Andrew says is good here. Be cautious, but doesn't mean necessarily jump out at the moment. It means pay attention, right?
Yeah, I think that the common theme that I've heard everyone say at the conference and on all of our treasury phone calls is that the 60-40 portfolio is dead.
Yeah.
So if the 60-40 portfolio is dead and you are 60% in equities and you're going to carve out of that equity portion of your investment portfolio an allocation for Bitcoin, the question becomes, what does that percentage look like? And I think in the past, like you said, the 1% has been kind of the way everybody's tiptoed into the industry. Yeah. But in my mind, it's going to be more like a 50-40-10. And I think that's even, just because of the lack of knowledge about Bitcoin. I think 10 years from now, it may be 25-25-50. You see what I'm saying? Like, we may see heavier and heavier allocation into Bitcoin, so that you have appreciation potential during recessions, because that's really what ultimately it's about. A lot of the printing press will continue, and so no different than the oil in the ground will always continue to come up in Texas. Houston is somewhat recession proof. It doesn't mean that recessions don't hit Houston, but it means that it doesn't hit as hard. And so Bitcoin is that commodity base income level that I think people are going to steer towards. But I think that's just a sign of utility, honestly. I think we finally have found a utility for Bitcoin, a real world utility for Wall Street, and why they want to use Bitcoin as this type of an instrument. And I think war and all the things that are going on right now only actually create a stronger case for it. In the short term, obviously everybody's selling, but everybody sold when Elon and Trump hated each other for 3 days.
For that week, right?
Yeah. So I mean, who cares? Like, these are buying opportunities. I can't think of a set of transactional rails that's more war resistant than Bitcoin. I can't think of one. There is no one. So again, it goes back to, okay, you're investing dollars. Where else are you going to put them? Like, what other instrument are you literally thinking about going, you know what? I need to sell some of my Bitcoin to buy this. This is where the action really has potential over the next 3 years. Like, there isn't another vehicle like that. So, it's fun to talk about selling and highs. Is this the blow off top? Is it not the blow off top? Who cares? There's nothing. If it's the blow off top for Bitcoin, God help us on the stock market. That would be my point. So the blow off top is if especially it's attached to geopolitical war. Those types of overlying currents. I don't think that anything is going to change human nature as it pertains to having knee-jerk reactions. But does that mean you'd rather sit in cash during a war than Bitcoin? Like, Only you can answer that. I know the answer for me. That if I have to leave my house in the middle of the night because I live in a war-torn country, that would be what I would consider to be the worst case scenario from a war perspective.
Yeah.
What do I want to leave the house with? 10 duffel bags filled with gold bars, coins, and cash, or memorize 24 words and walk across looking like I'm impoverished and go set up a life somewhere else. Like, yeah, it's a pretty easy choice as far as I'm concerned. And every single asset that has served its purpose, even secondarily, like watches. Watches are a great asset to walk across borders with. You can't walk across the border with $100,000 in cash, but you can walk across with a $6 million watch. Go figure. And so all of these instruments are inferior to Bitcoin is the point. So that would be my take.
So that's what you do then. You jump across borders with $6 million watch. Is that what you're telling us?
No, a $6 million watch is not easily liquidated. It's much better to walk across with like 10, $100,000 watches.
Oh, so you just got like up your wrist then, right?
If you need to do that. Well, I've never been in a war-torn situation, so I don't know what that looks like. But I don't know if that's a good idea, walking across, borders with hundreds of thousands of dollars of watches on your arm. Yeah.
Well, I think you bring up a great point, though, because, hey, what's happening? Iran, right? Iran getting hit by, missiles coming down there. But then also there's this report that, and I haven't been able to verify, but there was a report that some hacker group had hit the banks or something, or one of the banks, one of the largest banks there or whatever. And it basically shut it down and people couldn't get access to their money. And supposedly the group is saying, oh, not only did we shut it down, but we erased all the records.
And in other news, that happened a year ago, and then 3 years ago, and then 5 years ago, and then 7 years ago, and then 10 years ago. It's a never-ending thing in the Middle East. It's a never-ending thing.
Listen, it's a never-ending thing in America. 6% of banks in the last 20 years have failed. So if you had money in those banks above what the FDIC insured, it's now 250. It used to be 100. Yeah. All that money got lost. You were investing in the stability in the stock of the bank itself and didn't even know it. And that's what you are by putting deposits in a bank. You're betting on their solvency. So do you want to bet on a bank solvency with people running it that mismanage funds and have bet on the wrong bets and have all sorts of issues that are real world, or do you want to bet on something that has real world value that has no operational risk whatsoever, and you can literally keep it in your brain? It's again, what else are you going to sell into? Even if you are one of the crazies that have 90% of your net worth in Bitcoin. Like, I understand that mentality. If you're a bachelor and you're living in the Bahamas and you made a bunch of money in Bitcoin and that's all your net worth, and you don't have any family that you need to build stability around, by all means, keep 100% of your net worth in Bitcoin. And that's not a bad option, but most people aren't like that. And so it's kind of like, where is that line for you and what's prudent and what's not? But I don't see why war makes a case against Bitcoin. I see why war makes a case for Bitcoin is I guess the point. Yeah.
So completely unrelated, because I have some thoughts on some other things. I just looked up Circle's stock price. It's up 15.8% today. Just today, it's up 15.8% today.
These are the latecomers coming in.
Just again, the liquidity is so. Scratch everything I said about maybe we're at a top. That I was just kidding, but that's not true. Listen, there's going to be 25 companies in crypto over the next 6 months that go public. And it's going to be fast and furious. Some of them are going to be great. Some of them, listen, Circle isn't even that great a business. They give half their money away to Coinbase every quarter. But the stock's up, I would assume more than 380% as of today. In the past 3 weeks. That is going to turbo boost every possible IPO associated with crypto. And again, now we're talking about market structure, right? So there are institutions that don't have the ability to go out and buy spot Bitcoin, or may even not have the ability or approval yet from their internal whatever to buy spot Bitcoin ETFs. They may not be allowed to do that yet.
Yeah.
But
I would argue that Circle is worth every bit of what it's trading at, and probably even more, just because I don't think we can underestimate the fact that they were the first company to crack the code on basing it in treasury bills. Like, that was the thing that really put them on the map, and is still the biggest distinction point. They're first market mover, and they have the market share, and everyone knows what they are. Everybody knows that they're going to continue to grow at an exponential rate. And in fact, as crypto grows, they stand to grow as much as the likes of Coinbase, right? Because everyone's going to use their technology. So integration and growth potential and all the recipes that we look for a huge multiplier in publicly traded companies, it's all there in spades. I mean, I would much rather use USDC than Tether. Much rather use it. And I'm coming from a tech guy. Like, Tether sucks compared to USDT. I mean, seriously. And the more you get the Stable Coin Act, the Genius Act, integrated into the banking system. I saw a tweet from you, Andrew, right after that passed about, the landscape of change materially over the next 3 years. Well, I think USDC is going to be at the center of that. I literally think they will be at the center of that nucleus, and it will be someone else's job to catch them, in my opinion, because I think they've done it in a way that puts the U.S. dollar's interests first, and at the same time solves all of the issues that blockchain can solve.
Yeah, we're going to find out. We're going to find out, because USDT right now, in terms of transactions and all those things, just absolutely dwarfs USDC.
I know that. I know that.
And then there's also going to be enormous, competition from a JP Morgan stablecoin, a Bank of America stablecoin. There's now how will all those work? Cross organizations? I don't know, but they'll have to, and they will in some way, shape, or form. So it's just a question of, what does it look like in 2.5 years? What it looks like is there's going to be there's going to be a significant adjustment and change in banking, no question about it. These are the first fruits of going to a spot where, things like settlement will change so fast. Tokenized assets will begin to rise and become the norm. The trading associated with overall Wall Street will get to a place where it's now 24/7 within the next 2 to 3 years. This is, again, the beginning of adjustments and changes. When you change settlement in the past 5 years from T+3 to T+2 to T+1 to T plus whatever no longer exists, and you're just using stable coins that settle essentially in seconds, you now have the rails associated with being able to do every version of transaction in seconds. So it's going to be, I said on another show that there will be, roadblocks that will be put up as this happens, right? There will be roadblocks that get put up. But we'll see how long those roadblocks last. Yeah. We'll find out. But there's no doubt that dramatic change. So think about it this way. Some of us, I won't say who, were available to remember when we went from just everywhere you went to buy anything, it was basically cash, to now we have these plastic cards, and we don't have to write a check, right? Standing in line at Kmart, and somebody's writing a check for their groceries, right? Now we have these plastic cards, and that shift took much longer to happen because it's just a different time, right? People didn't trust certain things. This shift will happen. That took 5 to 10 years. This shift will happen in a 2 to 2.5 year period. And along with it will come an enormous amount of change. Now, again, there will be bumps in the road. That will happen. That's inevitable. It's just interesting to see what that ecosystem is going to look like, how it will change things, how it will push, long-standing organizations to adjust. I'm surprised JP Morgan is moving as quickly as they are with their JP Morgan stablecoin. True to form, it'll probably take Bank of America another 1.5 years to get on board with something like this. But they'll have to be able to compete. So
you didn't hear they're already running their entire banking system on the XRP ledger.
Yeah, shoot me in the face with that commentary.
Well, but I think you bring up a good point there. When we talk about shifts in the whole structure, right, of a thing that's used across such a wide swath of people. It's like now is the time to get involved. We're going to be 20 years from now. People are going to be like, man, I wish I had gotten into stable coins or into Circle or into something like right now. And they're going to say it 20 years from now when they're going to say, oh man, look at all them lucky people. They got so rich off that. And the reality is people they saw the opportunity, right? They saw the opportunity. They see it shifting here. They're getting involved in shifting. They understand it's going to take a bit to get there. They understand, like you said, there's going to be roadblocks along the way, but it's going to make its way through it. And, I don't, when I look at stuff like that, it's always people were lucky, right? I've got friends who are musicians and I watch them play, in dive bars and whatnot for 10 years. And then they finally get some success and people are like, oh yeah, look at that overnight success. Yeah. Overnight of, 10 years, on the road, 320 days out of the year, dive bars, sleeping in vans and whatnot, and it's just this funny way that people seem to make themselves feel better for not doing the thing that they wanted or that they thought maybe they should have done at the time. They talked themselves out of. And I think we're going to see a lot of that. I think there's a lot of that between not just, stable coins and Bitcoin, but all that infrastructure stuff that comes along with it and all the companies that are pivoting along with it, and some people
it's no different. It's no different than the internet, right? When if you had made this statement 25, 30 years ago and said, every company will have web capabilities, an internet presence, web functionality, and an app, you'd go, no way, there's no way. But look how fast that has happened. There isn't a company of consequence on the planet that doesn't have a website or an app or some way to interact with them digitally. And that's where it's going to go with blockchain. Every single company on the face of the earth is going to use blockchain to some degree.
In the last 5 minutes, Circle is now up 20%. We said 15%, 5 minutes ago. It's now up 20%. It's just extraordinary. And it's been trading since
that 4-hour candle looks good.
June 5th. It's been trading for 13 days. It's just remarkable. The demand is really extraordinary. Well, I mean, what's coming up next is Tron is going public, and where has Tron's business shifted to? It's shifted to their work with stablecoins. Their work with stablecoins it rivals USDC and USDT.
Where is Ripple shifting to? Stablecoins. Everybody is. Everybody.
Well, remember, it wasn't that long ago everybody started changing their name to crypto or something like that to get on board with rebranding and all that. It was just a few years ago. Was it a tea company that did something like that? I mean, it was just absolutely insane, right?
The tea, the iced tea company, sure. We're going to see. We thought last year was exciting because the Bitcoin ETFs finally happened, Ethereum ETFs, and so there were these explosive inflows. The inflows associated with the money moving from one space to another, associated with both IPOs, stablecoin bill, and all those things, is going to dwarf what happened with the Bitcoin ETFs in the first year. It is we're in the midst of a moment where there's, a massive shift. The same way we look back at huge shifts in technology or in finance or whatever that we remember from our past, that are, seminal moments. We're living in one right now. We're going to look back 5 to 10 years and say, it was discussed on Scott's show yesterday that 3 years from now, we're all going to be doing most of our transactions from digital wallets, but we won't even really think of them as digital crypto wallets as we do now. It will just be ubiquitous.
It's just be what it is, right?
Across our life and across transactions and across everything. Because think about it this way, we run a business. And so when we take payment, different ways we take payment, we take a wire transfer, we take this. The easiest way to do an exchange of goods and services is send, Bitcoin or Ethereum or USDC or USDC. Yeah. Bing, bing. You don't have to go anywhere. You don't have to go to the bank. You don't have to explain to them why you're doing it. You don't have to fill out a piece of paper. It's not a 90-minute sort of
there's no fraud. There's no chargebacks. There's nothing. It's instantly settled. And you're 100% right. The integration into the banking system is going to take away. I think that's why the credit card companies are adopting, crypto so quickly, because they know the writing's on the wall. If I've got two payment options, one, I have to pay $1,000 a year for a black or a gold Amex or whatever the fee is, and the other one I can pay free. The only advantage to this is that I don't want to settle some transactions instantly, that there's some clawback advantages to dealing with people that try to screw me, and I can then cancel the charge. That's one advantage. But there's also a ton of fraud and a lot of pain in the butt that goes along with that. How many times do you have to call the credit card company and go, hey, I got fraud in my account. Can you send me a new card? It's like a weekly occurrence, literally, for me. And so all of that goes away with blockchain settlement, all of it. And that, that's worth its weight in gold. So you can, if you combine, the efficiencies, and you combine the fact that, like Andrew said, there's such high demand for these technologies. Mm-hmm. I think this is is powerful, if not more powerful than the Industrial Revolution. I literally believe that. I think that what we're experiencing from a money transfer perspective, the ultimate ecosystem of liquidity is that liquidity can flow anywhere, anytime, and settle instantly. We're like months away from that being a reality. When you have an exchange that you can trade tokenized stocks, crypto, it's a bank as well, and you can hook up bill pay to it. You have a credit card issued by that company. What are we even talking about here? I mean, literally, you've got full integration of every financial system under one roof. What does that allow you to do? Well, it allows you to play arbitrage. It allows you to cycle between assets much more efficiently and quickly. It allows you to participate in things like Circle. If you don't want to go set up a separate brokerage account and get access, it's connectivity to all the money. Ripple used to say all the money is their slogan all the time. Not all the money on Ripple, but crypto, all the money. All the money will go to crypto. Every dollar of it.
So, I said yesterday, crypto exchanges are becoming banks. Banks are becoming crypto exchanges. They're going to be sort of one and the same again over the next 2 years. And Tillman just put it, just talked about it really well. They're going to be, banks are going to be adopting crypto technology. Crypto exchanges are going to be offering banking type of products, right? Credit cards, debit cards, the ability to trade stock. Kraken and Coinbase. Kraken's already doing it. Coinbase is about to do it. They're bringing their perps all the way back to the United States as well.
Kraken and Andrew, by the way, Tether on Coinbase. Here's another huge thing that ties to Tether and acting like a bank. Do you know on Coinbase right now, if you just have USDC and you just leave it in there, you're earning over 4% interest, passive. You don't have to stake it. You don't have to do squat. And show me a bank in America that's paying 4% interest on deposits. that also are issuing credit cards that give you rewards back in crypto, that are also trading tokenized, that you can trade tokenized equities through and all the crypto through. That's the point. Like these exchanges are already ahead of every single financial institution on the face of the earth. And why can you not earn 4% in Tether deposits, but you can earn 4% in USDC deposits? I don't know the answer to that, but I do know that Coinbase is smarter than me, and they know the answer to that, and that's why they're offering that. So, I think I think this interconnectivity is the next wave, and if you can't offer the consumer every ride in the park, then they're not going to come to your park. That's the bottom line.
So conservatively, Coinbase has 100+ million customers. Okay, so 120, 130, 150, but let's just be conservative. It's 100 million people. Guess how many customers Bank of America has globally?
A billion, I guess. I don't know. How many?
70 million.
Are you serious?
I'm dead serious. Yeah, it's right here. There's
That's
69
insane.
million. There's 69 million customers.
So they're already bigger, and they're already better on every front. They're literally much, much better.
So I remember, 3-4 years ago when Coinbase went public, it was like late 2020, early 2021, whatever it was. Somebody that I hugely respect in the TradFi space, Josh Brown, who I've mentioned before, runs a really, 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 really big RIA and probably runs one of the best TradFi podcasts, Compounded Friends. Does a great job, right? And I remember him saying, and he was really wrong, and he was wrong because of the stat that I just shared. What does Coinbase do that anybody else can do, right? Okay, they don't do anything. It's just not a business I want to be involved. Well, their stock is up something like 450x, not 450x, but 450% since then, right? And this is why. This is the reason why. Because they've got 100 million plus customers. They're growing and growing at a rapid rate that they'll get to 200 million customers in the next 2.5 years. Write it down. That puts them at 2.5 times the size of Bank of America, which is one of the top 10 banks on the entire planet, right? So now Bank of America effectively pulled out of their business in Latin America and some other areas over the last 10 years. So there probably was a time where they had 100 million customers too, but they don't now. They do all their business. 69 million of those 70 million customers are in the United States. But Coinbase, think about that. Coinbase is in a position where they can command conversations, they can command deals, they can command partnerships more so than Bank of America.
Yeah. That explains a lot why American Express basically is signing up. I mean, think about it. American Express is the most sterling snobby credit card company on the face of the earth. And they're bending a knee to the almighty Coinbase. I mean, that tells you pretty much everything.
It's because of their customer base. Pure and simple, it's because of their customer base, right? So Gemini has a credit card too that in the crypto space, everybody loves. But do we have any idea who issues that credit card? Like it's some bank, it's Visa credit card, I think, but it's some bank that nobody's really heard of. Coinbase, American Express. That's a different conversation, man. That's a different conversation. It's because Coinbase is there's not a whole lot of people in crypto that love Coinbase. There are reasons why. But here's the thing, that may be the case, but Coinbase and their leadership, man, they are pressing the edges. Yeah. They are pushing.
I think they're pressing, but very conservatively. I mean, a 4% yield isn't crazy. It's actually, in my mind, a rational yield for deposits. Like we should be able to get 4% on deposits of our crypto. They're all growing at a much faster rate than that. And the fact that Coinbase has now become a bank right under our noses, and not just a bank, but the biggest bank, it's only going to get more and more severe from an advantage perspective from here. In fact, I'd venture to say that the big question is who is the government going to anoint to be the second competitor like Coke and Pepsi, so there isn't a monopoly. And you know, it's really interesting because Kraken seems to have done the same playbook as Coinbase, but I don't see the same. I see Robinhood stepping into that role more, even though I think Kraken's probably got the infrastructure to do it better than Robinhood does. But I think that's really going to be the question: is who steps into that secondary role and goes and gets the first, 75 million new customers in the space. And I do think that I did some math while we were on the podcast. Tether, I kind of take back what I said. They only have to buy $13 billion worth of treasury bills to basically match USDC's, solvency or risk profile. So, they could easily step into that. They're going to have to, in my opinion, based upon the stable bill and, the Stable Coin Act and the Genius Act. But this is where, like I said, industrial revolutions are made, where the newest companies that take over the Fortune 500 indexes are birthed. Like that's what we're watching.
What I mean by Coinbase is pressing the edges, right? They effectively own a sizable portion of Circle, which, they do. And that revenue streams to them, which means that when they have their Coinbase conference last week, on stage with Brian Armstrong is the CEO of Shopify, saying that Shopify is going to institute USDC stablecoin movement across, and Shopify runs 80% of all small businesses like across the United States and across the globe. Shopify is the website that you set up initially because it's the easiest, right? So huge company. Well, then earlier this week, I see Brian Armstrong is standing in front of the London, Senate little thing that they have. So he's meeting with the lawmakers in the UK to increase their presence there. They announced the American Express card, Coinbase card, yada yada yada. So whether it's pressing USDC, pressing banking availability at Coinbase, and then broadening their footprint across the globe, they're pressing, right, and they're being aggressive. Like, when was the last time, Bank of America made an announcement about something, or you see them meeting with something? They're not in the business of doing that. They're in the business of protecting their business, right? Not growing their business. And man, I too am surprised that when I Googled how many customers does Bank of America have across the globe, I
would have thought for sure over 300 million, sure. Because, you think... Yeah, well, that's really, really surprising.
Yeah, well, it goes to the reality associated with at least Coinbase, the power that it has.
Well, and it tells you the demand, like you said. It tells you why the ETFs have been so successful. There's a hell of a lot of people out there that want to engage with crypto. I mean, a lot of people, and that are willing to. I mean, can you imagine the growing pains? I've been a Coinbase customer for a long time, and man, it has not been the greatest of all relationships. It has been a growing relationship, and they've gotten better and better and better. But the amount of cost and problems that existed in Coinbase's operating system over the last 10 years has been, nothing short of extraordinary. And the fact that they have 100 million customers through those problems, through the growing pains, that is even more evidence of what people are willing to do.
How many customers does JP Morgan have across the globe?
I don't know.
90 million.
82 million consumers and 6.4 million small businesses.
Look at that.
So Brian Armstrong's a bigger deal than Jamie Dimon. That's what I heard you just say. Yeah, that's it.
Correct.
Yeah.
That's correct. So think about it this way, right? So, and I said this maybe 2 years ago. I was at a bank branch and I was doing something and dealing with a guy, and I just, he asked me what I did in the space and all that stuff. I'm like, I don't understand any bank right now that's building bank branches. That doesn't make any sense to me. Like, what are we going to need these for in 5 to 10 years?
Well, the bank robbers will go out of business if you don't have the bank branches there. They can't walk in with the guns, I mean, right. You have to find a new way to live.
But this this conversation and us realizing that Coinbase's stock price versus JP Morgan or Bank of America tells us this is the exact story, right? That's the reason why Coinbase is a huge growth stock.
Well, and you would have to argue very, very adamantly that JP Morgan Chase has saturated the globe from a brand perspective, and that Coinbase hasn't even begun. I mean, comparatively speaking, they've had how long has JP Morgan been in business? 100 years. They've had a lot of time to get their name out there. Coinbase, 10 years, like 1/10 of the time.
Well, who has the lead in terms of tech, follow-up, service, and growth for the world of 24/7 tokenized stock trading? Is Coinbase better apt to do that quickly and benefit the most? Or is Citadel or BlackRock or JP Morgan? Coinbase is more ready to do that than anybody else, right?
No.
So that is I mean, Tillman and I think that, at least we think that we are of the mindset that we're, kind of on the cutting edge of what's to come in terms of crypto and technology. But I'll tell you, just even this conversation, I learned, I didn't think Coinbase was bigger than these organizations, and they flat out are. Now, there are differences between, assets under management and custodied assets, which, oh, by the way, Coinbase is starting to catch up. Why are they starting to catch up? Because they're the custody entity of record on all the Bitcoin ETFs. Okay. So, man, I am, we're closer than we thought we were to being at a spot where everything changes.
Yeah.
Everything changes.
And Mark's got a good question here, I think. He says, what are your thoughts on spending fiat to acquire Circle or coin stock versus Bitcoin itself? And, if I'm looking at it, I think it depends on what are you trying to do, right? I think, first of all, those are two different things. I don't think you do a Bitcoin or, Circle or coin. I think you're doing Circle or coin for appreciation, for growth, for all that kind of stuff. I think basically if you're getting into Bitcoin, there's going to be some appreciation there. But I think at this point, as we've talked about so many times before, Bitcoin really is a protection, right? It's protect what you have versus, you're buying it for all that explosive growth or whatnot that you would be looking at.
One of Tillman's favorite phrases is "and both." I think this is an "and both" type of thing.
Well, diversification is your best advantage. That like if you're on the football field and you're scheming, hey, how do we win this game? You have to start with kind of the fundamentals, and the fundamental of an offense is to have a balanced offense. You got to be able to run the ball and you got to be able to throw the ball both. And if you can't, the defense kind of has you cornered. I personally believe this with all my heart, because I've seen the smartest people that I've ever met all agree about this without talking to each other, which is diversify into everything that you have conviction to own, and buy that when everyone hates it. So just make a list of all the assets that you want to own: Bitcoin, Quant, whatever it is.
You have to throw XRP in there, man. I mean, come on.
XRP, whatever those are. I'm serious though. And then you say, okay, I'm going to spread my capital out across all of these different assets, and I'm going to have, certain percentages that I feel good about across them. And then you just keep that capital, that powder dry, and you buy the dips. That's I guess it can't get more simple than that. And then guess what? Then you sell the tops. So you can't get married, and it keeps you from getting married or emotional to one asset. The reason why people ride things down to zero is because they have all their eggs in one basket, and they don't want to get out. If you have all your eggs diversified, you really don't care. Like one's not doing well, but 9 are, and then you can just ride those downfalls or those downturns without emotion and without feeling like you've screwed up, and without your wife yelling at you and all the things that go along
sleeping on the couch in the garage.
Yeah, exactly.
Well, and to that point, I'm perfectly comfortable shilling Arch Public, because that's what I do for a living each day. if you're in a position where you can use tools then to DCA into these products and then have the algorithms themselves take some off the top. And then when you take something off the top of a volatile stock like Coinbase, then you're moving that into that yield, moving it into Bitcoin. That's the world's best flywheel ever, right? And by the way, our company is going to have the ability to do that over the next couple of months. You're going to be able to trade Coinbase in a meaningful way and have our algorithms do that for you. And if you want to take the yield that's associated with, moves to the upside with Coinbase and then put it into an algorithm that's doing the same thing with Bitcoin, now you're accumulating Coinbase. Now you're accumulating Bitcoin. You're accumulating the ecosystem is really what you're doing. And
you're buying a piece of the network is the way that I look at it. Mm-hmm. And where else do you get to buy a piece of the network? I mean, you can buy Amazon stock, you're buying a piece of the network, but it's just a piece of paper that's actually telling you own a piece of the network. It's not actually the network. So when you buy Bitcoin, you're buying the network. You literally are walking away with a fractional ownership share of the entire ecosystem of that network. And so it in my mind is the most direct investment you can make because you have complete control over it and you actually own the asset itself, not a piece of paper that reflects that you own the asset.
Again, on this podcast, we're at minimum, we're giving people that are listening and are engaging with this the reality that there are crypto companies that dwarf current well-known banking institutions, right? So I put in effectively the two largest banks in the United States. So not everybody uses those. People use Alpine Bank or PNC or Fifth Third. Well, how many customers do those places have? Well, it'll take me 5 seconds to look that up. I'll punch in here, Fifth Third, and what do I get? They've got, I don't know. It doesn't tell me. Sorry, bad.
I'll tell you, it's 30 million. I'll just tell you that.
Okay, so 30 million, right? So 30 million, right? So there are exchanges that we rarely talk about, like the OKXs of the world, right? That have nearly 100 million customers across the globe.
Binance, hundreds.
Binance, good grief.
Yeah.
Binance is probably bigger than BBVA. Binance is probably as big or bigger than HSBC, which does 90% of their business in Asia and Europe, right? So, to not even go down the road of, well-known European banks, the Deutsche Banks of the world, the UBSs of the world, all of those places, right? So we're going to find ourselves very, very quickly where they have a huge collection of customers that are larger. And again, this goes to demographics, right? Because there's not a bunch of 72-year-olds that are doing banking with Coinbase, right? There's a whole heck of a lot of.
Well, let's talk about some crazy numbers. This is very fascinating. I'm going to do a little paper on this, but Uphold.
Mm-hmm.
It's not even a big exchange.
Yeah.
Do you know they have 10 million users and they have 1,800,000,000 XRP in reserves? So they have $4 billion in XRP reserves. I mean, think about that. They're a bank of very decent size. They can come in. They're going to be they're U.S. based. They're going to be a huge bank in the U.S. I think in the near future. Why? Well, because XRP people love them. I mean, they are the only bank.
Well, again, who's to say that Uphold doesn't go public?
That's exactly right.
That doesn't happen. Right? They have a customer base. They have an asset base. And by the way, they have a huge fan base, right? So if they go public, their stock's going to go up in the first few weeks because
any company that has $4 billion in cash equivalent reserves, I mean, they should go public. You get a 6x, 10x, 30x multiplier on that. It depends on how crazy it is.
We're probably not that far away. I would be genuinely surprised based on the moves that, for example, Ripple is making if Ripple doesn't go public. If Tron's going public, heck, Ripple's going public.
Well, Ripple's been talking about going public for a long time. They're definitely
we're in a different
going
world.
public.
We're in a different world.
One day.
No, I'm just saying. I think they would have gone public 4 years ago if we weren't in the previous regime. I think it's inevitable that they go public. 100%. Yeah.
Well, it's probably now it's probably a better time than it was a couple of years ago anyway. So for them,
well, and them buying Hidden Road makes them a bank instantly. You see what I'm saying? If we're saying that exchanges are banks and that's the future, them buying Hidden Road and them having a stable coin that they've created, this is like the writing on the wall. It's very bright and very legible. I mean, exceptionally legible. Everyone's doing the same thing that has the money to do it.
But remember, Ripple and
which
XRP
tells
are two
you
different things.
Well, it goes back to the old, like, who has the gold and who's selling the shovels? Who wants the gold? They know that there are a lot of people that are gonna go after the gold, and they want to sell as many shovels. They want all of the access to those customers as possible. And now that we find ourselves in a regulatory environment where we can, it's a land grab. They're all moving as fast as they can move, and meaningful updates and decisions are happening at warp speed now. It's really a fascinating time to live in. I just hope that I do wish that we weren't in war and that this whole Middle East thing would get solved pretty quickly, so that we could take center stage again. Like right now, even though all of this is fantastic, it's not like we're gonna get center stage attention and while all this other stuff's going on.
Well, again, in terms of the U.S.'s involvement, it's just a choice. The Middle East is going to be has been the Middle East for 35 years. They're always going to shoot guns at each other. There's never been a year where there's not been a Middle East story about somebody hates somebody because of some weird thing we don't understand, and we shoot and bomb people. I mean, it's always been that way. So, I don't know. Maybe we drop a bomb or two, but other than that, I don't think Trump's all that interested in getting into some extended war with Iran.
Well, I don't think he's interested in getting in an extended war, but I do think he's interested in ending their nuclear program, and I think that he's been committed to that for a while vocally. And if he does engage even at that level, there is risk that it draws Russia into the conflict, and then you've got a whole big bag of mess to deal with. Russia and Iran have done exceptionally a lot of business over the last 5, 6, 10 years. I mean, they have a ton of oil based economy, relationships. They have a lot of weapons. Like Russia has sold weapons to Iran, I'm pretty sure, over the last 5 years. So it's just another thing. It's like the Ukraine-Russia war. We just don't need it. Let's figure out a solution and end it.
And it comes back to noise versus signal. That just doesn't change the fact that, Coinbase just signed up another 1 million customers, over the last 3 months, right? Yeah. So, that growth is not going to stop. It's going to continue. So even if there's geopolitical risk associated with share price, that's an opportunity in many ways.
Yeah, I mean, listen, even Arch Public, we've seen growth this year, unlike any other year that we've been in business. I mean, exceptional growth, like 1,000 customers a month type of growth. That's extraordinary. I mean, we wanted millions of people to use the software. That's our goal. And I think we're well on the way based upon the tailwinds that the whole industry has right now. And that's a massive game changer. When you can take your own hard-earned dollars and set up schedules automatically to invest in the hardest asset that's ever been created and the best wealth preservation tool that's ever been created, you really have given the power back to the people. The access again is unparalleled. So do I think that owning some Circle stock is a bad thing? No, I don't. Do I put it on par with owning Bitcoin in a store in a wallet? No, I do not. I think it's they're both tools, one being vastly superior to the other.
We got to jump. We got a hard stop at 1 o'clock. My man Chris. So great discussion today. Fantastic.
Yeah, I think a lot of good stuff. I think everybody picked up a lot of good information here, especially with the way things are going. Whether it be Bitcoin or stable coins and just kind of how things are headed. It is what it is. we're not saying we like, we're not saying we dislike, whatever. We're saying, hey, here's the information. Use it to however you need to use it to make sure that you're best positioned for the future as it comes in. So as always, guys, man, always a great time having y'all here. You guys make sure you're following them. You can follow Andrew at AP_abacus. You can follow Tillman at TexasOL61. Follow me at TXWest Capital. Check out that company.
Two things before we cut. We're going live with Kraken at the end of this month. So if you are a Canadian customer that wants to use the software and try it, you're going to have an option here. Or if you're a Kraken customer and have been waiting for this, then it's ready to go. We also have some exciting news. We have figured out how to trade crypto in your IRA with our tools. So there's only one thing better than trading crypto with our tools, is trading crypto with our tools that's tax-free. And that's what the IRAs and the 401ks, self-directed 401ks, give you the option to do. So if you're interested in either one of those, reach out to us because we have that ability now.
And tell them I sent you.
Yeah,
tell
exactly.
them sent you, all right?
Right.
All right, guys. Listen, I know you got to get out of here. We're going to get out of here. As always, remember, the only thing you control is how much you lose, folks. So let's take the trading and investing seriously. Until next week, y'all have a great week, great weekend, and I'll see you guys in a week, I guess, huh?
See ya.
Take care, everybody.